Hello, people. This is Mac. As I told you on my last video, I would have Marc Hill with me again today, and we'll go over some of the things that I talked about last Friday, which was regarding the crypto and what is happening in that segment of the financial market right now. And also, we discussed a little bit about the banks failing, which is causing the crypto to go up. And I said we also discussed the tech stocks. It's all part of the crypto phenomenon and everything else. They all related together. Crypto is part of the tech, and microchips, of course, is part of the tech. That seems to be some of our favorites right there, the microchips. Hello, Marcus. How are you today, Mark?
I'm doing great. How are you?
I'm doing good. Just got back from a trip from South Florida over the weekend, wrestling with the alligators down near Everglades City. Had a great time there, riding the airboat and all, going through all the different mangrove swamps there on that boat. It was very exciting. Should take that trip yourself sometime. Well, anyway, Marcus, just wanted to go over a few things right quick with you concerning your take on what is happening with the cryptocurrency, Bitcoin and Ethereum in particular. I know that you are not into many of the altcoins, so and Bitcoin and Ethereum by far the best, at least I wouldn't say the best, but they probably is the best in your opinion. Probably, in my opinion, they're the best, but maybe not for everybody. But when I look at what is happening right now, it sort of go back to a couple of years ago when we had the market where Bitcoin went up to somewhere around 67, $68,000. And of course, it came all the way back down. It had a low point somewhere around 18, 16, I believe. What do you think is causing this right now? Do you think it's the banking, what's happening with the failing of several banks in the U.S. and Credit Suisse over in Switzerland?
Yes, absolutely. We seem to be going through another banking crisis similar to 2008. I don't think it's as severe as 2008, but there's always been some turmoil within the banking sector every 10 to 20 years that cause a disruption in the markets. But basically, from my understanding, that SVB Bank, um, they concentrated a lot of their clientele into those venture capitalists who would invest a lot only in startup, risky, new tech companies. They didn't have a broad um, customer base. Also, you've got First Republic over in New York. They catered a lot to high net worth individuals with jumbo mortgages, $1 million or more, or 500,000 or more. So there's a lot of, but they got saved by Bank of America and two or three other banks pooled some money together to kind of shore them up. And now we got over there in Switzerland, Credit Suisse is merged with the UBS bank to stabilize the banking sector over there in Switzerland because there's only two banks. There was only two banks in Switzerland. Now it's just one big one. So I don't. I really. It's not a good thing, but I don't think it's going to be as bad as 2008. There can be money to be made. Just with any crises, there's always opportunity because money is never lost. Money is like energy, it's like electricity. Energy doesn't go away, it just gets transferred from one place to another. So what we see happening over the last 2 weeks, since there's uncertainty in the banking sector, and there's been like a 1 year downturn in most of the market. A lot of people been holding cash on the sideline because of the Ukrainian war and uncertainty there, uncertainty in that 2022 midterm election, which every election year, midterms and presidential elections is always uncertainty. So a lot of cash gets held on the sideline. So now we're in 2023, money's anxious to get to work because the big institutions can't keep holding money on the sidelines for too long. So what they have to do, they have to put it to work. This year, 2023, is scheduled historically. There's no guarantee, but it's scheduled to be a good year for the stock market going up. Because every year after a major election, every year after a midterm election, which we just had, the stock market usually goes up, historically speaking. Also, looking at the technicals, the technical analysis, stocks look to have bottomed out, in my opinion, from my analysis, not investment advice, but just from my experience. Also, like I said a little bit earlier, money is getting transferred out of the banking sector. So where is it going? It's going into the technology sector. You see semiconductor stocks, big tech stocks like Apple, Microsoft, Google, they're bottoming out and starting to trend higher.
Well, Marcus,
You also see crypto. I just wanted to finish. The cryptos also, Bitcoin is also a part of technology. That's why you see that on the rise also. But go ahead.
well, with what is happening right now, how can the small retail investor or trader, for that matter, how can he get in on this particular gravy train, so to speak?
There's really no choice but to invest. If any lesson has been learned from 2008 and right now with this banking issue, the average person does not want to hold a large amount of money or savings in a bank account. You just want to hold operating expenses, like whatever amount of money you need, say for 2 to 3 months of living expenses. You may want to hold it in the market, in a bank account, just to, fund day-to-day living expenses. But any type of savings or investing long term, you have to make the money work in long term growing assets, such as things like gold, Bitcoin, which is digital gold, um, stocks like you got utility companies as that go up more higher and higher long term, like the just to name a few, the Southern companies, the um, ticker symbol ED. That's the electric company over in New York. Consolidated Edison, Duke Energy down there in North Carolina and Florida, and many, many more. DTE Energy over in Detroit. You see, there's always going to be needs for electricity, and I like utility companies also long term because they pay dividends that give people cash flow. But that's just an example. I'm not saying anyone should do that, but yeah, do your research on utility companies. And we also have the electric car revolution coming, which is going to put us a very high demand on more and more need for electricity. Sooner or later, they want to convert all gas cars into electric cars. So just imagine the big profits coming in the future, more and more for electric companies and electric stocks. So I'm just saying, then you have big tech stocks. Now, tech stocks like the Apples, the Microsoft, things you use every day, things you understand, or people could just buy a basic S&P 500 exchange traded fund and not have to worry about individual companies. That's the safest thing for most people.
I just,
But yeah, you have to make your money work for you now, and it's easy. It's easy. It's probably easier to open up a brokerage account than it is a bank account, and you have to make your money grow. That's is it's easy, and that's really the only. That's the only way to go right now is to buy assets, turn your cash into assets.
so if a person is trying to build uh, like you said, for retirement or for generational wealth or for their family or something like along those lines, then those type of stocks and utility stocks in particular that you mentioned would be a far better investment for them because it would be somewhat a lot safer than going into other tech stocks where they could probably make a lot more money if they became a trader with those stocks rather than an investor. But they would have to know how to trade by using being able to read and understand charts. Is that what you kind of agree with that?
Yeah, just for a typical investor, I wouldn't buy individual tech stocks unless that person was really into researching and learning the cycles of how the technology sector goes up and down. Other than certain ones that always just seem to go up over time, no matter what, like Apple and Microsoft. Um, those are pretty much no brainers long term. Maybe even Google. But outside of those three, you have to do a lot of research. It's best to just for an average person to buy a tech fund, technology fund, like the QQQ. That's a technology fund. So then you own the whole sector and not have to worry about each individual company and what they do every quarter for the average person.
What about the person getting into wanting to get into microchips? What do you recommend? I not recommend, but what are you doing in that arena? You know,
Well, for me, I enjoy studying the cycles. Um, I'm a little bit more active than the average person, and I understand the computer chip revolution with artificial intelligence, and that as we see everything we look around has a computer chip in it, from the cars to refrigerators to your watch, your phones, street lights, everything, your doorbell, everything has a computer chip or will have a computer chip in it as the future goes on. Um, so I see that I'm a little more aggressive, and I'm a little bit more experienced and don't have a higher tolerance to risk and understand the cycles. Right now, we're going into an up cycle for the computer chip sector. I'm looking to see massive gains in 2023 for the computer chips and also crypto, such as Bitcoin, especially.
What about
Overall technology, overall.
what about
And
Ethereum? What do you think of that particular crypto?
I mostly focus on Bitcoin as being the most secure. All the rest of them, it's a little bit more risk, and I don't really dive too deep into the rest of them. But I understand. I always say, buy what you understand. Only invest in what you clearly understand the most. And the thing I like about Bitcoin over all the other ones, there's no one person in charge. It's a network. There's no one person that can mess it up. It's a code. It's a network of around the global network that keeps Bitcoin alive. It's like a living live computer code. And you don't have to worry about a CEO or any group of individuals that could falter. And Ethereum and all these other ones, they have human beings in charge. And you have to keep your eye on them a little closer. But Bitcoin is almost like gold. It's digital gold. That's what I look at Bitcoin. Right now, I believe as we're speaking, it's worth half a trillion, I believe, market cap value. But the price of the market cap of gold is like 11 or 12 trillion. So just if it when and it not if but when it gets to the same market cap of physical gold, it'll be worth at least $500,000 to $600,000 per one coin, coming from around 30,000 a coin as we speak today. That's just the base case, but it's going to take time. And from all my research, I sincerely believe it'll get at least to 600,000 as a base case. Just because you look at everything that's been digitized, it's become more valuable than the physical thing that it replaced. Look at Netflix, for example. They digitized video rentals. Netflix is worth way more than Blockbuster videos and all the other video rental brick and mortar places combined. Then you look at hotels. Airbnb digitized hotels, the physical hotel companies. Airbnb is worth more than all three of the major hotels companies combined. Marriott, Hilton, and I forget the other one. That's how powerful something is one more, Uber. They digitized taxi cabs. Uber is worth more than probably all the taxi cab companies in the world combined. So that's the power of digitizing something. And that's how I see Bitcoin. It's only 14 years old. It's going to take time, but they digitized gold. So it's not going to be just as valuable as gold. Eventually, it's going to surpass gold if it follows the same pattern as every other thing that's been digitized. That's why I like it so much. And I'm not saying I'm putting my whole nest egg in it, but I think it's prudent to have at least 5-10% of one's net worth in it, you know.
Well, one of the things for that for the individual out there, he said, well, I can't buy Bitcoin right now because it's at 28,000. Well, there's a certain thing where you can, like you mentioned earlier, you can open up an account with various I put this in my link, Robinhood, or in my description rather, Robinhood and Webull. There you can even link your bank account, or you could do direct deposit and have it to go directly into your Robinhood, for instance, and you can purchase dollar cost averaging Bitcoin on a weekly or monthly basis. I mean, try to just get in there and do something that and make some type of purchase and be in the game with everybody else. And that's an old saying that, hey, if you don't get in, you're going to be left behind. You know, so if you want to be in with the crowd, it's best that you start to trying to do something right now and don't wait until 10, 15 years from now, or maybe even 5 years, might be less than that. Someone just came out the other day and said 3 months Bitcoin will be at 1 million. I don't know about that, but and then it came back and said it's going to be at 10 million. Well, it might take a little while before it reaches $1 million, but like you said, if it go up to 500,000 over the next few years, well, you don't want to wait a few years from now and look back and say, boy, I could have been dollar cost averaging into this to accumulate a Bitcoin, which can be, I can't say what you would pay for it through the process of dollar cost averaging, but say you ended up paying $100,000 for it. And then, and at the end of that 5 years or 10 years or whatever is worth $1 million, then you've made 10 times of the amount of what you paid for it, which is an incredible return. Do you suggest anything like that, Marcus?
Well, I suggest I want people to do their research. It took me at least 2 to 3 months researching Bitcoin, listening to Bitcoin experts, reading about it to totally understand it and feel comfortable
Mm.
putting some money into it. And then learning about cold storage, taking it offline and putting it in storage where it can be safer, where it's not connected to the internet. That's a whole nother thing to learn, which may take a few months. Um, Also, I would encourage people to do something. If people aren't feeling that technical savvy, then at least buy some gold. At least buy some silver, physical gold and silver. You have to get the money out of cash because just sitting in cash uh is not a good thing. Because we can see for sure $1 will buy you less next year than it will this year. And so on and so on. Uh, every year, the value of your $1 diminishes 5 to 10 to sometimes 15% a year. And if it keeps up that pace, even at the lowest end, it's going to lose 2-3% value a year. I even remember, and your dollar is your energy. It's your purchasing power. It's the energy that you expended to give you a certain standard of living today and into the future. You have to protect that. One example with gold, I remember 20 years ago when gold was at maybe $300 or $400 per 1 ounce coin. Now, 1 ounce gold coin is $1,800. What was that? 4 to 500%,
600.
600. I mean, so that's how it's going to keep going. Gold is going to continue to go up in value so you can retain the purchasing power of your hard work and labor. It may be slow. It may not go up as fast as Bitcoin or make you rich overnight, but it does retain wealth. So do something. I'd rather have a gold coin. I'd rather put $1,800 into a gold coin, knowing that it'll probably be worth $9,000 a coin, maybe 10 to 20 years from now, versus putting 1,800 in the bank. And 10 years from now, that 1,800 will only buy me maybe $400 worth of goods.
Right.
So do something. That's put your money to work somewhere, but make sure you understand it and don't get too risky. An important thing about research, because once you understand something, like I really clearly understand computer chip companies. So even when they do take a little downturn like they did last year, I'm comfortable with dollar cost averaging because I understand the value. Those ups and downs of the stock market, that's just numbers on the screen. The true value will come within time. Profits will come within time. That day to day, Warren Buffett gave a good example about that. The day to day price of a stock. If you owned a farm, $1 million farm that produced food, produce veggies and whatever, are you looking at the real estate value of your farm every day to see what it's worth? No, you're not. So you know it's valuable, it's producing food, and if you get ready to sell it, you might look at the net the Zillow worth of that piece of property every other year or when you get ready to sell it, but you're not looking every day on how much your farm is value, even your car, which is not really an asset, but you don't check the blue book value of your car every day. Is valuable because it's a utility.
Uh,
So
right. Well, let me ask you this then, Marcus. For the people out there that want to get started on doing something, some type of investment, you've talked about the crypto market and Bitcoin in particular there. You also spoke about the tech stocks. But what do you recommend people research, start their research, and what particular funds, ETF funds, you think they maybe should take a look at, and not to say they go out there and invest in it, but they go out there and take a look at it and just do a little research on it before they decide to. If they want to invest in, they do that. But what are some of the ones that would be there for them to look at right now with a great potential for uh, to go up over the next year or so?
well, right now, this year, 2023, I believe technology has the most upside gain. So the best funds for technology sector is QQQ. That's a NASDAQ technology fund with all the top companies in there. And then you have, if someone is a little bit more risky, has more tolerance for risk, then they can invest in a leveraged fund. Now you really got to be careful. You have to have a high tolerance for fluctuations. Um, but they have leverage funds that'll go 3 times higher in an up market than a regular fund. So they have a leveraged technology fund also called TECL.
Mm-hmm.
Now that's a leverage fund, I believe, and a broker will make you sign a document. Make sure you understand the volatility of that leverage fund. That's only for advanced traders. So most people won't even go that route. But I'm just putting the information out there. Most people will do well in the regular QQQ and the SPY. SPY is just technology is a fund for the S&P 500. The top 500 companies in the world are in the S&P 500. So when a company becomes bad, they kick them out and they put a better company in. So you're always guaranteed to have some equity, some ownership in the top 500 companies in the world with SPY. And when it comes to Bitcoin, I recommend watching videos from Michael Saylor. He's an MIT graduate and he was the CEO of MicroStrategy. He's a billionaire. He was a physicist, I believe, or a rocket scientist at MIT. The guy is super smart and he really breaks down the value of Bitcoin in a way that's where he's so articulate and he really breaks it down where everyone can understand it. And he's very convincing. And he's a billionaire. So he's one of the people that really, really opened my eyes to the opportunity with Bitcoin. You can just binge on videos of Michael Saylor. He'll give you a lot of understanding in Bitcoin. And then you want to Google up some videos, some like 3 to 5 minute videos, how to put Bitcoin in cold storage, take it offline, keep it away, from that, from losing it online, from potential hackers. So yeah, everything you want to know. You'll learn more about finance from YouTube or just Google period than you will probably in any finance school at a college. Um, yeah.
Well, that sounds good, Marcus. I mean, that's some very. I'm just taking some notes here. I mean, some very good information, man. The triple Qs, the TECL and SPY. That's Sam Papa Yankee. Uh, for sure, those funds there. I've already invested myself in that Tekla TECL and others. But I'm
I
gonna
mean,
look.
another one I forgot to mention was the pure microchip play, which is SOXX. That's a fund for just purely investing in all micro computer chip companies.
Right.
Uh, um, that's a little more volatile though. The computer chips is high return, but it's high risk also if someone can't handle, you know, the big movements and day-to-day prices. But just to put the information out there.
Now that's different from the SOXL, right?
Well, yeah, the SOXL, that's a triple leveraged one. I'm really careful about mentioning that to people because that's for advanced traders and investors who can handle risk. It's a high, you can make a lot of money on it, but a lot of people don't have a stomach for the volatility.
Yeah. What
So
that
I'm
means,
hesitant.
then, what you're talking about volatility, what it means that it can go up fast, but it also can go down pretty fast.
Right. For example, and after the pandemic downturn in the stock market, that SOXL was at bottomed out around $50, $60. And it went from 50 all the way up to like around $1,000. So that's about 20 times your money within like a year and a half, maybe 2 years. So I mean that's some magnificent gains. 50,000 could have turned into 1 million on that upcycle with during that year and a half between 2020 and 2021. But also when it's a down cycle, it can fall 80%. So you really have to make sure you get in on the upcycle and get out. Don't be greedy and get out before the down cycle because it's cyclical. It's not steady earnings like a utility company. Like say they always just have steady earnings, no matter good economy or bad economy. But these computer chips, they'll do real good in profits for like a year and a half, and then investment will slow down, and then they'll do real good again. It's a cycle, like kind of like the car industry.
Well, thanks, Marcus. Well, you gave us a lot of information and stuff to ponder here and to go over. And of course, I'm going to put some links in the description here for people that wants to go out and take a look at a few things here that you've kind of mentioned in order to be able to get started in buying these things. Most all of these stocks can be purchased on No Fidelity and other major exchanges, but you can also check it out on Robinhood. And go in there and check it out and see if they actually carry all of these stocks. They should carry most of these stocks. I know they don't carry all of the altcoins and things like that, but they do have the stocks. So with that, Marcus, I want to thank you for coming again to talk with us, and hopefully we'll see you next week, and we'll have another good show for next week pertaining to the people's finances. And people, don't forget to subscribe, like, and share. And also check out Marcus. Marcus, why don't you give us your websites and your YouTube that people can go to and check things out on your sites.
Yeah, you can go to Marc Hill Wealth at YouTube, and also Marc Hill .substack.com. Read some of my articles, and also wealthmotivation.com, and also Marc Hill Wealth on Instagram. So yeah, thanks for having me. It's always good to share some insight and knowledge with the people.
And don't forget to check out Marcus' book, The Secret to Prosperity by Marc Hill on Amazon. Thank you, people, and have a great evening. And don't forget to subscribe, like, and share.